Did you hear Robinhood got sued? Yeah, most people didn't. Robinhood got sued because they allegedly stole $34.1 million from investors by executing their trades terribly. Buyers and sellers of stocks are connected through market makers, and in return for their service, market makers will take a small premium off the top. This is called the bid-ask spread. So the worse the trade is executed, the more money these market makers can make. Robinhood seems to have struck a deal with these market makers that they're going to put in poorly executed trades so that they can make more money, which means that Robinhood can sell those trades for a higher premium. This is an extremely profitable business model for everyone except you. For a brief moment, I thought Robinhood was living up to its name. I was wrong. So Robinhood shut down trading on stocks like GameStop and AMC and even removed them from the search bar. I made a video a little while ago talking about how Robinhood was making a whole bunch of money but misleading investors by selling order flow to companies like Citadel. It turns out Citadel actually has a stake in Melvin Capital, which is this hedge fund that is getting beat up by these GME long positions. Citadel also buys about 41% of Robinhood's order flow. I don't like the GME trade. I've spoken out against it before, and I think it's really hazardous to people's wealth. But regardless of that, this is market manipulation and should not be tolerated. Here's why Robinhood is pausing trading on a couple specific stocks. From the perspective of a retail investor, it looks like the stock automatically just appears in your account. You put the money in, it shows up, but this isn't actually how it happens. It usually takes about 2 days for a stock to settle into your account. And so the way brokerages make this instantaneous feel is they actually push it to a clearinghouse, and then they actually guarantee the stock for you. So in order to secure your trade, Robinhood actually puts up money with a regulating body called the DTCC. The DTCC actually just required Robinhood and other brokerages to increase the collateralization amount for GME trades. In order to meet these regulating requirements, Robinhood had to raise $1 billion last night, and they're still not able to keep up. That's why they're pausing. Vlad Tenev, the CEO of Robinhood, is reportedly staying in a hotel because he's receiving so many death threats from angry Redditors. This marks yet another escalation of the GameStop debacle, and it just keeps getting more insane. Protesters were apprehended after throwing dog feces at the Robinhood headquarters. Don't get me wrong, I think all of Robinhood's excuses about helping investors stay informed and that they had clearinghouse plumbing issues are all a bit of a cop-out. But on the 28th, Tenev came out and said that nothing was done at the order of a market maker. I can't confirm or deny whether or not that's true, but he's going to stand for a congressional hearing on Thursday of this week. So if you're interested in learning more about what actually happened, I'd recommend you tune in. Selling order flow, which is the way brokerage companies like Robinhood make money, was actually pioneered by Bernie Madoff. Yeah, Ponzi scheme, Bernie Madoff. When a brokerage sells order flow, they are selling your order to a market maker. A market maker is the person who will buy the security from your broker, and they will mark it up a little bit in return for their service, which is selling it to someone else as quickly as possible. The worse the trade execution, the more money the market maker makes, and therefore, the more your brokerage can sell your trade for. So long story short, your free brokerage has an incentive to rip you off when you place a trade. This has caused a lot of problems legally, and now there are ways that you can tell if your firm sells order flow. There are 2 forms that you can find on your broker's website. The first one is going to be Rule 605. The second one is going to be Rule 606. They have to disclose if they are selling your order flow.